Hello, I'm Richard Hunter and welcome to our look ahead for the week commencing the 4th of November. It's been a fairly choppy week in the markets for one reason or another. In terms of the US-China trade spat, there have been some positives and negatives washing through. Certainly in terms of the positives, along with another Federal Reserve cut, it's been a good week for the US. And even in terms of the China situation, there were some economic figures towards the end of the week, promisingly from China, particularly in terms of its demand for metals. So, moving to the year to date, we've got a situation where the Dow Jones is currently up 16%. The S&P 500 is up 21%, and that includes twice hitting new record levels during the week, and the Nasdaq is up 25%. In terms of the UK, obviously it's been dominated by news of the general election. It's been a fairly choppy week, although the FTSE 100 does actually stand up 8% in the year to date. Looking forward to next week, we've got news coming out of the Monetary Policy Committee, both in terms of an interest rate decision, if any, and of course an update on inflation. Company-wise, there are three well-known names reporting. The first one is Associated British Food, which has got its full year numbers. Whilst this has got AB Sugar, agriculture and a well-performing grocery division at the moment, it tends to be its retail division which takes the headlines in the form of Primark. Primark, of course, on the downside is part of the retailing sector where Brexit uncertainty remains. More positively, it's recently had a foray into the US market, and any update on the success there will be welcome. Sainsbury's half-year numbers also next week. It's had a fairly torrid time this year following the collapse of the Asda merger. In the year to date, the shares are down around 22%, so the company is now looking to turn itself around, amongst other things, by a 5-year, £500 million cost reduction programme. On the plus side, the purchase and integration of Argos has gone very well, and it's currently looking at a store review, so that should be an interesting update. Another one, of course, will be Marks and Spencer, also having had a torrid time this year. Shares down around 25% in the year to date, which culminated in its relegation from the FTSE 100 for the first time in September. So the obvious questions remain. Generally speaking, general merchandise tends to come through quite weak. Food tends to come through quite strong, so we'll see what sort of update we get there. And any update also, of course, on the £750 million joint venture with Ocado, where Marks and Sparks has a 50% stake, might also be welcome and slightly more positive perhaps for its longer term prospects. Thank you for watching. Have a great week.